Well, good afternoon, everyone. As you can see, more red ink this afternoon as the American market has been running now for the guts of an hour on Tuesday, October the 11th. The S&P broken that magic 3600 number, 34 ticks down on the day. All of the measures of the trend on VectorVest UK and VectorVest USA are down. I'm looking at USA at the moment, and the market buy-sell ratio right down on its knees again after yesterday's trading. That's the case in both sides of the pond. Both markets in a mega oversold situation, but that doesn't mean, folks, that they can't go lower. Let's have a look at the VectorVest market timing charts. And if I pull up the US market, that's the US market. Let's look at it over the last 6 months. And as you can see, if I put on the longest term measure of the trend on VectorVest, that's been down now, folks, since the 26th of August. If I put on a medium-term measure of the trend called the DEW, it's been down since pretty much the same day. It called a very nice rally here from the 19th of July. But as you can see, most of the moves have been down, and that's been the case in the US market since last November. UK market a bit stronger. It really started to fall just in January. It has always been my view that 80% of the exercise is being in sync with what the overall market is doing. And when the overall market is falling, as one of our members in London says, he goes on holiday. And that's pretty much the best thing to do. This is the VectorVest composite. We'll look at the S&P in a second. There's been some quite easy trading in here. Because the market just moved so beautifully without messing about, running stop losses, etc. But to me, it looks as if this wants to go a great deal lower. As you can see, and I'm going to put on some of the VectorVest parameters here now, the market timing indicator, which is a proprietary VectorVest measure. If I maybe make it a color that you can see. As you can see, just here, the price is making a falling low and the indicator was making a falling low, and that invariably means that there's more downside. Now, if this double bottom were to hold here, FFF, then they would see a little bit of bullish divergence here. Clearly, if this market breaks down, that can in fact be blown into touch as it was here. The big number ahead of all of these markets, folks, is the American CPI on Thursday. And my contacts in the city tell me that they've, in all the years they've been trading, and they're news traders, where I tend to be a technical trader, but they said that they've never seen a market that's in fact susceptible to a number as it is at the moment to the American CPI number. Now, that's expected on Thursday at 8:30 their time, 1:30, I think, our time, at 8.1%. Now, a softer number, in other words, coming in under the 8.1%, would have a very positive effect on this market. It could push it up enormously and, in fact, create a rally like the 19th of July rally here. A harder number coming in at what's expected or above 8%, and we could see a huge downside move here. So as far as I'm concerned, the trends are down, and there is nothing more to say on that. I'm now going to go to the S&P 500. Let's start off with the 3-month view. And as you can see, let's get rid of all my lines, clear my lines. It's amazing how markets like to go back to that 21, it should be 21 day moving average. I think there must be quite a few algos following that. Let's see if I can make that a little bit bigger so you can see the darn thing. There we go. And as you can see, it went right back there and defined the highs of the day on 3 days. This island reversal, folks, is never healthy. And that's one of the old charting rules. Then we got an inside day. Then it broke down, and it actually gapped down yesterday as well to that low. The 3600 level would seem to have gone. We're sitting at 3579. I think we're going to go lower here today. So if we now look at the market intraday, that's the intraday. Let's get rid of the 21. That's a 5-minute chart. Yesterday was a good day. It was Friday. Yesterday was a particularly good day, in fact, because there was some lovely setups. I traded it short from here. Short. There was 20 points in that. Doesn't look like much now. I should have shorted it right there again, but I was in a VectorVest meeting at the time, so I couldn't. But this was a particularly good trade here. If I can sort of, and folks, if you're trading a monthly chart, exactly the same patterns happen in a monthly chart. And this is my favorite setup. It's called an up thrust. Markets find support here, and then they go back once, kiss, and then they went up and took out the stops. That's called an up thrust. And that was just a beautiful trade. That was at 5 o'clock UK time yesterday to about 6 o'clock. And also what was going for that trade is that even if you're not an up thrust sort of a chap, there was a really cool looking rising wedge there. So it was all coming together somewhere around here. But as you know, if you know my work, I trade springs and up thrusts more than anything else. So where was it going to go to yesterday? Well, let's just complete the lesson, because if I, in fact, take a fib of this, that's the 1.618 extension of the pullback, which is my favorite way of finding targets. And your humble correspondent had a target just there, and it sold into that. Well, a tick or two lower. At that stage, that was 6 o'clock in the evening, and I didn't trade any more. That was a beautiful rally. That was probably the trade of the day. Lovely outside bar, but I was long since gone at that stage at 6 o'clock in the evening. So today I'm still short as we go into this video. I applied a bit of rocket science this morning, and I just shorted the low of the first 5-minute bar. Actually, if you have a look at the overnight market, the E-mini overnight market, the market was at that stage using this gap. And remember, that gap traded for what, 12 plus hours in there. It was much, much easier to see the sell-offs. So I'm currently short of this. My stop loss is at entry. We shall see. Try and clock up a few ticks. It's been particularly easy trading in that the simplest setups have just followed through. I assure you that on many occasions, if you just sold the open of the first 5-minute bars, you would get chopped to hell and back. But because there's such energy in the market, some simple setups are working well. And when they're working well, you've got to make hay. You really got to make some good money. I got stopped out of gold. I was long of gold. I'm waiting for another entry in gold, and I'll post that when I see it. And I'm still holding that. I got stopped out on a spread bet on the gold price, but I'm still holding the GDX, and I still have a position in the XLE, although it's given up an awful lot of its gains over the last couple of sessions. I think for long-only players, certainly wait until Thursday's well out of the way. A number coming in on Thursday at 8.1% plus will cause this market to free fall, I think. So I would leave it. Well, I would leave it, even if you've got fingers that are vibrating to actually hit the old buzzer. I would leave it until Thursday, or maybe even next Monday, before getting involved, even under the most bullish of circumstances. Okay, I'm getting old and conservative, but they said that there are no old, bold traders. So just be careful and with your money. Otherwise, it will find a new owner, maybe. So, unfortunately, probably some more downside before this is over. Thanks very much. Bye bye.